This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. This episode is brought to you by BNC Pro, the brand spanking new digital wealth platform featuring an all-in-one suite of customizable institutional-grade applications that help you manage your crypto investments. Yes, research, chart, screen, analyze, optimize, report, and more. BNC Pro is the ultimate portfolio tool for individual or enterprise use. Streamline your workflow, manage your crypto, and master this brave new asset class your way with BNC Pro. Go to bnc-pro.com now to create your free account, or just look for the link in the show notes to this episode. Now, on with the show. My guest today is Hugh Karp. Hugh is the founder and CEO of Nexus Mutual, a people-powered alternative to insurance. Nexus Mutual uses the power of Ethereum so individuals can share risk together without the need for an insurance company. This is pretty cool. Hey, welcome to the show, Hugh.
Thank you very much for having me. It's great to be here.
Excellent. Great to have you here, Hugh. To begin with, maybe let's get a bit of your background, because I understand that you do have an insurance background, and I think that probably makes sense given what you're doing now. But fill us in on the background and perhaps your introduction to blockchain.
Yeah, I guess I've been doing insurance for a little while now, 15 years or something, maybe a bit longer. Studied actuarial science in Australia, in Canberra, and worked for insurance companies for many years, and then moved to London and worked for one of the largest reinsurance companies in the world. Managed to lead a reasonable sized team there, and ended up being the CFO of their life operations in the UK. So I kind of got the background on the insurance side of things. From a personal point of view, got really interested in Bitcoin and the blockchain technology that sits behind it, and would have been 2010 or something. I kind of discovered it, I guess, on some forum, and kind of went down the rabbit hole a little bit, like a lot of people have. I found it really fascinating, and that you could send money to someone else with no one in the middle. And I kind of played around with it for a little while, and didn't really know what to do with it. So I kind of put it down, and always thought that was kind of, I'll just file that away. That was really useful. And then I heard about Ethereum a bit later on after it had launched, and that's kind of when I got really back into it, because it kind of triggered the whole if you can write an if-then statement, then you can effectively write an insurance contract. So I kind of felt like that was my area of expertise, and I always wanted to do something in the technology space, and so that's kind of how it started, really. That was the germ of the idea, and it kind of has gone from there.
Fantastic. Well, look, Hugh, just before we dive into Nexus Mutual and insurance, I'm kind of fascinated by this idea of an actuary. Is that how you say it?
Yep, actuary.
Yeah, I mean, for the benefit of listeners who don't know what an actuary is, just explain what that is.
Yeah, it's basically mathematics and statistics, and the idea being that you can predict the likelihood of future events based on historic data, and so you basically analyze past claims experience, and then use that as a prediction to work out what might happen in the future and what price you should set the insurance at. So as well as doing a bunch of other things, but so I'm a kind of life insurance actuary by background, so do all of the really morbid stuff with mortality tables and death rates and all of this type of stuff. So that's kind of the background.
That's right. So the same way, like, traders in financial markets, a massive part of trading, of course, is risk management, and that's kind of what an actuary does for the insurance industry, isn't it?
Yeah, kind of work out how much, like what you should price the insurance at and how much capital you should hold to make sure you're confident in paying claims. They're kind of the two broad roles. And, there's a whole bunch of different things you can do. But those are the kind of two core functions that actuaries tend to do.
And not to dwell on it too much, but you probably be familiar with the work of Nassim Nicholas Taleb, who, he's obviously... has a financial trading background and also a statistics and risk management background, and he's a fairly opinionated character as well, of course. He's had some interesting things to say about insurance forecasters. Are you aware of what he's had to say?
No, but I'm sure it's nice and derogatory, which is good.
Yeah, again, I'm not going to dwell on it. All right, let's not get sidetracked. You've become interested in Ethereum and this idea that you can create an if-then statement and perhaps create some kind of insurance product. So, what made you decide to actually go ahead and start building these products?
I guess I'm fascinated by the technology and the fact that you can do things in such a different way to the current way that financial services operate. The fact that you can run things in a non-custodial way, to me, is a complete game changer. You've got, I just know from the insurance industry that, specifically, that there's all these rules and regulations and stuff that sit there, and they serve a really good purpose, and that basic purpose is to make sure that the insurance company has enough money and doesn't mismanage it, so that it can pay claims, so it can basically back up its promises that it makes to customers. And so all of this kind of infrastructure that sits around things, and the laws and the regulation and the processes and procedures, and so much time and effort is put into making sure that this is okay. But if you can actually put that on the blockchain and have full transparency and hard-coded rules that everyone's aware of, then all of a sudden you can achieve the same outcomes using a new technology that we just didn't have before. And that has to strip out massive layers of cost, and those benefits can effectively go back to the members or the customers of the products. So, I mean, to me, it sounds a bit quirky and in the background, and perhaps maybe a little boring, I don't know, but to me it was just a fascinating technology that could achieve the same outcome in such a different way, and such a much more efficient way.
Yes, Hugh, and look, on the face of it, you use the term quirky, and I think that's certainly a good starting point. But it's quite a crazy, radical idea, really, to think that you can offer a form of insurance to protect against things like smart contract failures and what is already, a fairly, let's say, nascent, volatile industry with, a little bit of a history of, let's say, quirks in or exploits in various smart contracts. So it sounds like this is a product or a feature that is desperately needed in the industry, but also from a risk point of view, perhaps something that there's a little bit of risk involved from your side as well, surely.
Yeah, of course. I mean, insurance is just about risk transfer from someone who's less able to take it to a entity that's more able to take it, and that's essentially what's happening here. I mean, insurance has always been kind of at the forefront of different industries just blossoming. Like, you go back hundreds of years, and like the shipping industry and stuff, it wouldn't have got very far if you couldn't get like bottomry loans and other things like that that actually, if something went wrong with the ship and it sunk, then the loan was written off and etc. So it allowed the kind of economy to take more risks and progress more quickly because it had this safety net. And so in some ways, insurance always kind of starts off like this in new industries. It starts off as a community-based approach, helping each other out, addressing a real need, and then it kind of hopefully helps the industry flourish and grows from there. So, I mean, this is, in some ways, we're using new technology, but we're doing some very old stuff from a conceptual point of view.
Yeah, no, you're exactly right, Hugh, and you've explained that really well. Financial markets are one of the oldest parts of human history, and it's just, when you're starting up a new market, there's some kind of hedging or insurance is certainly necessary. But what's really interesting about what you're doing here, Hugh, or what is possible in the new DeFi space or blockchain generally, talk me through the actual process here, because we're using the word insurance, but as I understand it, I guess it's technically correct, but it's a little bit more nuanced than that, right? So what you're providing is not it's kind of an insurance-like product, but the claims payments are enforced by token incentives, and there's a mutual and there's members, and everyone can vote on the blockchain, right? Am I sort of on the right path here?
No, yeah, you're exactly right. So we're not legally providing insurance. It's what's called discretionary cover.
Yes.
And this is actually this is a thing that exists today. We haven't just made it up. It's you can set up these things called discretionary mutuals, and essentially it's just a club, and the members join and they share risk amongst each other, and they decide the terms and conditions of what gets paid and what doesn't get paid. And usually that and like we have, they kind of write a document like describing what the terms and conditions of the policy are, and then the members interpret that when an event happens. And so the way we've done that is there's a voting mechanism to determine the claims, and so people have to stake some tokens to participate in the voting, and then there's a there's a process to if there's certain thresholds are met, then the claim gets paid, etc. And so in it's just basically a club, and these things, as I said, kind of operate today in a more regular fashion. They're not kind of automated on Ethereum or another blockchain, etc. But essentially what we're doing here is just kind of automating an existing structure that works, and that works in real world. So and then the benefit we get is like everything's kind of automated, and we can do it quite globally, and and the costs, etc., just drop out the bottom, and they go back to the members. So everyone kind of, if you want to get involved, you become a member of the mutual, which actually means it's kind of like a DAO, but we also have a legal entity sitting around this thing. So you sign up and become a member of the legal company, and then you get the rights of the members, etc. So it's similar to a DAO or a cooperative or something like that.
Yeah, that's right. And so just talk me through a little bit how that works in terms of who is eligible to join the mutual. It could be anyone, and what rights do they have in terms of voting rights, and what tokens do they have to hold to execute those rights?
Yeah, so basically anyone can join the mutual. We do have there's a KYC processes, and there's about 20 or so banned jurisdictions, but aside from that, pretty much anyone can join the mutual.
Sure.
And then you get and then you can purchase tokens if you want. So if you want to contribute funds to the mutual, you can some ether to the mutual. You can get our native token back, the NXM token, and then that's kind of used within the system for like voting on claims, for also doing risk assessment, which is kind of like underwriting, like choosing which risks to back, and also for voting on governance items. So if we want to change the system or upgrade a parameter or something like that. But from a kind of customer point of view, if you just kind of want to purchase some cover, then you can come along and decide which smart contract you want protection against. So say you want some cover against Maker or Compound or Uniswap or something, then you pick that particular system and ask choose how much cover you want, and then you can pay for the cover in ether or DAI, and you don't actually have to deal with the token too much. It's just kind of in the background, so it's very kind of easy from a customer point of view, and the token's more for the kind of more advanced functions where you want to kind of actively participate in the system and like kind of provide work to the system, and you can get rewards for participating essentially. So it's very it's kind of splitting kind of two parts really. So the kind of core customers, and then there's kind of the workers or the people that kind of make the mutual run and provide the information to it so it can actually function.
Very interesting, Hugh. Well, so in terms of the actual cover that you're providing, so you mentioned, I could come along and I want to get cover against like a maker smart contract or something like that, or, slightly bigger picture view, perhaps you want to get cover against events like, the DAO hack early on, or an issue with, the parity multi-sig wallet, those kind of examples. But as I understand it, your vision is really to eventually even move beyond smart contract cover to real world products, traditional insurance products like earthquake or fire risk or things like that. Is that the case? And if so, what sort of timelines and challenges are involved in expanding to that kind of cover?
Yeah, that's where we want to head. We want to be a bit more general. I think we'll definitely stay within like the kind of crypto native community and risks, etc. for a while. Several years, I'd say. The thing is, we've got a like an engaged community, and there are lots of risks out there in crypto that are very, very hard to get cover for from the regular insurance industry. And that's kind of the key here. The key is providing products that are hard to either you can't get from the regular insurance industry for whatever reason. And so that's kind of the niche that mutuals really work well in. And so we'll start with smart contract cover, and then we'll move on to other things like it could be like centralized exchange hacks, cover against that, or like slashing risk on staking networks and all those types of things. They're kind of like a few kind of more obvious choices. And then once we've kind of got a bit more scale within the crypto native space, then we can start looking elsewhere and perhaps doing some real world stuff. And things like earthquake or natural catastrophe type cover are quite easy to implement, and you can actually provide cover on a global basis quite quickly and access markets that the regular insurers struggle to, especially at lower scale levels. So so that's kind of the vision, but definitely staying within crypto for a little while and making sure we kind of harden the system and also make it build it so it's flexible. So our kind of idea is that if anyone should be able to come along and say, I want this covered, and they can come with a document that says this is what the terms and conditions should be. And if there are enough members that kind of stake against that, then cover's offered at a certain price. And so we shouldn't, as the team, we shouldn't be the arbiters of what products get brought to the mutual. We're aiming to build a system that you can bring any risk to the mutual, and if the mutual wants to cover it, then great.
Fantastic. And in the meantime, Hugh, I love this idea that you're focused on the crypto community at the moment, and especially because you're exactly right. There is a lot of risk in crypto, and particularly in DeFi at the moment. And yeah, I mean, any legacy insurance company is not going to be too interested in talking to participants in the DeFi space. So it's fantastic that you're here. So let's just talk a little bit about what the risks are in DeFi at the moment and how you assess those. Because I've seen that you talk about three main risks in DeFi, right? So technical smart contract risk, there's an external risk, and there's an economic incentive failure risk. So do you want to just briefly cover off what those risks are and what your framework is at Nexus Mutual for evaluating and trying to price those risks?
Yeah, so exactly right. So kind of when I'm talking about risk, I kind of also exclude like financial risk, so like the price of tokens going up or down or something like that. I'm more talking about the failure modes where the kind of system doesn't work as it was designed to. And
that's a great point, Hugh. So what you mean there is, just before we talk about those risks, you're saying that there's just a standard risk of any token, any trader or investor losing money. That's a risk of the game, but that's not what we're talking about. Got it.
Yeah, exactly. We're just talking about the system didn't work. Why
100%.
Why didn't the system work? And so there are a couple of reasons. Like the technical so the Solidity code or the smart contract running on Ethereum, was that coded correctly? Did it have a bug in it? So that's like the parody of the DAO hack type stuff. And so that's definitely what we're covering. That's our core product to start with. And that's kind of a big kind of scary risk right now. the next two are what I call like external risks. So this could be something like an Oracle failure, or actually a governance failure. So someone might buy up a whole bunch of the tokens and maliciously change a parameter and steal all the money or something like that. So that's a potential issue. So it's kind of like external from the point of view is external to the smart contract. It's some outside actor not working as designed. And then there's the third category, which I call the economic incentive failure risk. So often these systems will have incentives or costs or benefits for outside actors to do certain things, and like Maker, for example, has auction processes and things to make sure that the die holds its peg, etc. And so they require liquid markets or other things working, and those actors being adequately incentivized to perform those actions. And if they're not, then perhaps the system doesn't work as it was designed, and something can fail, or the die may depeg or something like that. So there's things like liquidation penalties, etc. So those are kind of the three broad categories of risk. At the moment, Nexus just covers the first one, the technical smart contract risk. Wanted to start focused and small because this stuff's all new, and then we'll look to expand, and we're looking to expand into kind of more broader coverage and stuff at the moment. So there are various ways of doing that, but we're starting more focused, and then we'll look more broadly later. Okay, and Hugh, can you tell me a little bit about who the customer profile is for Nexus Mutual? And I know that's a kind of a strange way of saying it, because I'm sure it's very wide across the crypto ecosystem. But is it like individual traders or investors or fund managers, or is it developers and ecosystems and DeFi companies, or is it a little bit of everyone from all those sectors, I imagine? Yeah, it's a bit of a spectrum, that's for sure. We've got a few different groups. We've got some like individuals, like just traders or people looking to make some money in DeFi, etc. And they might come and buy some cover with us and stuff, and that's great. Or they might provide some capital for us, etc. Then there's a kind of another group, which is probably the funds, or a bit more serious kind of investors getting involved in DeFi, and these more and more of these are coming quite regularly now, and they're more savvy with their risk management, and so they're looking for solutions like what we provide, and so we've had a lot of interest from them, especially with this yield farming craze that's kicked off very recently, where you can kind of earn bonuses for providing liquidity to different protocols. And so if you kind of know what yield you're going to get, or rough yield you're going to get, then you can get slightly less yield and also take some cover with Nexus, but have it in a much more risk protected way. So that's kind of that's a big booming sector for us. And I guess the other customer group is really the projects themselves. So often when a project is releasing their own smart contracts, they will buy some cover kind of on behalf of early users to kind of give some confidence that if something does go wrong, then we can at least refund you partially or something, or we can do something there. So and a lot of projects have started doing that, and that's really good from our perspective, because it kind of shows that we're kind of helping out the ecosystem and growing, and we kind of think we're a good partner for kind of every project, especially in Ethereum, which is, I guess, where we're focused. And so hopefully we just be able to support everyone get a bit more liquidity in their protocol. That's right, and that was my introduction to your company or your product, Hugh. Is one of our sister companies here at Brave New Coin is Tekami Capital, who have just launched some DeFi portfolios, and so people that invest in those portfolios are able to hedge their exposure if they wish against smart contract failure through Nexus Mutual. And so I think you're providing a much needed and necessary service for the wider crypto ecosystem. Thank you. We're getting a lot of interest from those types of funds and stuff. So it's really great to be in that position. And our main aim at the moment is to is to grow our own mutual to get more capital and grow in size so that we can actually help out more people. So we've been hitting our capacity limits quite readily on especially on the very popular DeFi yield farming protocols such as Compound and Balancer, etc. So people want cover on that a lot more than we can currently provide. So we've got good problems to have, but we've got to try and scale up our capital as well.
Absolutely. And look, just while we're talking about DeFi, what's your sort of big picture vision? Do you have a view on what is happening with DeFi and where DeFi is going as the hashtag DeFi vortex continues to suck in assets from all around the ecosystem?
Yeah, I mean, I think it's fascinating. I mean, to me, it's a very natural use case for blockchain. It's financial asset, and it makes the best use of the technology, in my opinion. And to me, I mean, obviously, it's kind of speculators driving speculators right now, which is a good way to bootstrap things, but to me it's not where we want to be. If we're still speculators driving speculators in 5 years' time, I guess I'll be disappointed. But I think it's a good way to start, and it gets scale, and then hopefully we can then start kind of exporting that more to regular people once you can kind of abstract away all of those complex blockchain stuff from them, so they don't have to worry about it, and then hopefully it becomes much more useful and makes these types of financial services much more accessible and open to people that may not be able to get access or may have been excluded in whatever country they're in. So that's the type of thing that I'm hoping to participate in. The speculation is, I guess, good and interesting for now, but hopefully that's not all it's got to offer.
Yes, indeed, Hugh. And well, I guess on the flip side of this, you have a background in insurance, so you're a risk management guy. You understand risk, you understand the downside. So my question is, what keeps you up at night in regards to, I guess, well, DeFi or the wider world, or is there anything that's sort of troubling you, nibbles away at the back of your mind when you're trying to go to sleep? What keeps you up at night, Hugh?
That's a good question. Probably my kids, but no, I think honestly, it's in terms of DeFi. Sometimes I worry a bit that people are just very keen to just throw money at anything if there's a really high yield on it, and lots of people potentially are going to get burned. But I think we kind of have to grow up a bit. There's kind of a it's really hard to do a kind of move fast and break things approach when you're dealing with lots of substantial funds early on. And I think there's certain places for that. And maybe we can just launch like restricted kind of alphas that don't take in more than X dollars, etc. And then we can progress to other stages. But I just think we need to be a bit more rigorous and focused, and I guess a bit more professional, and about clearly displaying warnings and I mean that doesn't solve everything, but but taking a more focused and cautious approach on some of these things, even though one of the best benefits we've got in the DeFi space is the speed of iteration and deployment. And so I think trying to balance those two things is going to be difficult, and we're not going to get it right all the time. But we also need to encourage teams to kind of, not put massive amounts of customer money at risk really, really early on.
Very sensible approach, I think, Hugh. Well, let's go to a very quick break, and then let's come back, Hugh, and we'll finish off with the very famous Crypto Conversation Hot Take Round.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
All right, we're back, and I am with Hugh Karp. He is the CEO of Nexus Mutual. Hugh, I like to finish each podcast with a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
Yeah, of course.
Excellent. I just want your hot takes, your hot fire. Take your best shot. Here we go. Hugh, where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
I probably wouldn't describe me as either of those, but definitely not a Bitcoin maximalist. I probably wouldn't describe myself as an opportunist either. To me, it was more about the functionality and usefulness of what we're doing.
Yes, look, I think that's a very diplomatic and sensible answer. Hugh, I probably, because I started asking these questions over a year ago when the podcast began, and now, 50 episodes in, I wonder if perhaps I should update that question. It's less relevant now, I feel, especially as DeFi evolves. So, all right. Well, listeners, get at me if you've got a fantastic DeFi question to fit in the crypto conversation hot take round. I can probably make one up myself. Let's keep it moving, Hugh. What would you say is your firmest conviction crypto opinion?
That Bitcoin's going to have a security budget issue at some point in the future. It's going to have to deal with it somehow. Don't know how, but it'll have to deal with it.
Oh, controversial. That's interesting. How would Nexus Mutual provide cover against something like that happening?
They can't really.
No.
Well, to me, it's a certainty that something's going to happen. But it obviously depends on the time frame. That's the big unknown. But yeah,
of course.
Yeah, to me, there's going to be a very challenging community discussion, infight, whatever you want to call it. But it's going to be interesting. That's for sure.
No doubt. All right. Well, speaking of interesting, you're not in America, and look, neither am I. But ask every guest this question, Hugh: who do you think wins the American presidential election in 2020?
Oh, I have no idea, really. But I think it's a choice between two terrible people, but terrible candidates anyway. I don't know. I hope Trump doesn't win, but Joe Biden's not much better, so I don't know.
Yeah, look, I completely agree, and maybe I should stop asking that question as well. It just feels slightly redundant given that, most of the world is on fire at the moment. Anyway, okay, on to a brighter note. Hugh, Bill Gates famously said, "We tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. What do you think the blockchain space looks like in 10 years' time?
Well, I really hope that it's, as I kind of said before, perhaps it's actually making a real difference to real people's lives, rather than just this gamblers and speculators off in a corner. I hope it breaks out of that mold and provides real utility to real people. That's what I hope we're doing.
Great, sensible answer, completely agree. Okay, well, Hugh, William Gibson, sci-fi author, he said the future is already here, it's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't really aware of it?
Perhaps this is completely biased because I'm in it all day, but DeFi seriously feels like living in the future. It's like the fact that you can get like a new financial product off the ground in the space of weeks compared to like 5 years or something in the regular financial world is just such a massive difference that we'll be able to do things that we never even thought possible. Right now we're just redeveloping stuff we kind of know, but I'm sure there's a bunch of new stuff out there that we haven't even thought of yet that's going to come out soon.
Absolutely, completely agree. Hugh, let's zoom out. What do you think is the long-term future for the human race? Do you see dystopia or utopia?
I don't see either. But I very much hope it's not dystopia, of course. Something like that could happen. Somewhere in the middle, we'll constantly have challenges that we have to deal with. Perhaps I'm just being too reasonable and down the middle here, but it's not going to be utopia either. I think that's an impossibility.
Yeah, well, look, you're an insurance guy, so I'd expect you to be reasonable and somewhere down the middle and hedging your bets, as it were, because it's a pendulum that swings back and forward, but you're always somewhere in between, right?
Yeah, exactly.
All right, let's finish this off. Hugh, what is your favourite science fiction book, film, show, or universe?
Oh, that's a really good question. I should have done more research. I really loved Akira when I was young. And that's it's quite old now, but it just had me fascinated and stuff. And I watched a decent amount of manga and stuff when I was younger as well. So that type of stuff got me fascinated and things. But more recently, I haven't been able to spend much time reading books and stuff. It's been a bit chaotic recently, but yeah, that's I guess that's my answer.
Yeah, you could almost have said DeFi, even if DeFi is not a book or a film or a show, but it's certainly a universe and it's certainly science fiction.
Yeah, it is a bit crazy and out there, and it takes anytime you have to explain it or you try explaining it to someone who've never heard about it, you realize how mind-bending or like just paradigm shifting it is, and it just takes a while to get over those initial communication barriers.
Yes, indeed. And look, I love that you said Akira, though, because, I remember seeing Akira on the big screen when I was a very young man. Would have been, as a long time ago, this probably would have been, I want to say, like the 90s almost. That's when it came out. Anyway, we'll put a link to that in the show notes, I reckon. Let's finish this off. Hugh, been a pleasure talking to you today. Nothing else to say really, except the microphone is yours. Please take us out. Please tell the people where they can go to find you on your various platforms and where they should go to find out more about Nexus Mutual and what you have to offer.
Yeah, no, thanks for having me on. So if you're Hugh Karp at Twitter, at Hugh Karp on Twitter, or at Nexus Mutual on Twitter is probably the best, easiest places to start, and then you can dive in from there. We've got a lot of documents and stuff about what we're doing at Nexus, so and then end up in our Discord or ask us questions. That's probably the most active place where the community is. So looking forward to chatting with you if you've heard about us on the podcast, and come and ask me questions whenever you want.
Fantastic. Hey, thank you very much, Hugh. All the best.
Thank you.
Boom, there you go. Thank you for listening. That was today's episode. Thank you to Hugh Karp from Nexus Mutual. Links in the show notes to Nexus Mutual, also to Tekami Capital that we talked about on the show with the DeFi portfolios, which can be protected against smart contract failure through Nexus Mutual. Also, shout out to Hugh for going with Akira. The manga film was actually released in 1988, an animated film, very, very influential, very much a cyberpunk story set in a futuristic, post-apocalyptic Tokyo. Bikers, full cyberpunk aesthetic. Actually, if you've seen the demo footage of that upcoming blockbuster game, I think it's called Cyberpunk 2077, something like that. Yeah, that aesthetic also obviously very influenced by Akira, and that game looks pretty cool, actually. All right, something to look out for. That's us for today. See you real soon. See you next time. This was the Crypto Conversation for a brave new coin.